The Oakland house is located in the Cayman Islands and serves as the registered office for around 20,000 companies from all over the world. Now, this doesn't mean that these 20,000 companies are doing shady things, but it does show us how easy it is to get an offshore address if you want one. This is where companies go when they want to separate themselves from the prying eyes of government agencies and the general public. The trouble is, most people don't know how they can do this too, until now. Now, there are a lot of people out there who would tell you that offshore banking is only for the rich and powerful, or people who are looking to hide money from the government. But this isn't actually true. Offshore banking is just another way to keep more of what you earn and have some peace of mind, knowing that your money is safe, no matter what happens. And once you understand how it works, you will see that it is not complicated at all. In fact, it is very simple, and anyone can set it up in minutes. So anyone can be a tax resident of a country like the Cayman Islands. And the best part about having an offshore bank account is that you can still live in your home country and enjoy all the benefits of being a citizen there, while also taking advantage of the low taxes and privacy offered by the offshore bank. Some famous people, such as Will Smith, Mel Gibson, Madonna, and Peter Thiel, all have offshore accounts because they know it makes sense to do so. It is also common for professional athletes and entertainers who make huge salaries, but pay massive amounts of tax to set up shop overseas as well. And we have seen many politicians doing the same thing throughout the years. They may claim that they are doing it to avoid paying taxes, but in reality they are just trying to keep more of what they earn and protect their assets. But setting up an offshore account isn't just for the rich and famous anymore. These days, it is much easier than ever before to open an offshore bank account and start taking advantage of the benefits that come along with it. A great place to start your research is by watching this video. Today we are going to talk about a few different ways that offshore banking works and why everyone should consider doing it. We will also discuss some of the advantages that come along with offshore banking and how it can help you save money on taxes. To begin, let's take a look at what offshore banking is all about. When most people think about banking, they picture a traditional brick-and-mortar institution that is regulated by the government. Well, offshore banks are similar in that they offer services such as checking accounts, savings accounts, and loans, but unlike traditional banks, they are not subject to the same regulations. In fact, offshore banks are usually located in countries that have very low or even zero taxes, which means that you can move your money there without having to worry about the IRS getting their hands on it. Additionally, offshore banks typically offer greater privacy than traditional banks, so your financial information will be safe and secure. Now, you might be wondering why anyone would want to use an offshore bank instead of a traditional one, but the answer is simple. By moving your money to an offshore bank, you can save a lot of money on taxes and nobody will know about it. Let's take a look at a few examples of how this works. In the first scenario, we have someone who is a salaried employee earning $100,000 per year. This person is single and doesn't have any dependents, so they end up owing around $20,000 in federal taxes each year. They also live in a state that has a 5% state tax, so they end up paying around $5,000 to the state government every year. Now let's take a look at someone who earns the exact same amount, $100,000 per year. This person is also single with no dependents and lives in the same state. However, they set up an offshore bank account in a country with zero taxes and moved all their money there. As a result, they owe $0 in federal taxes and $0 in state taxes. They still live in the same state and pay the same price for everything, but now their take-home pay is much higher. As you can see in this scenario, this person is able to keep more of what they earn by using an offshore bank account. If we run the numbers, you will see that this person saves around $25,000 in taxes every year, or 25% of their total income. That is a lot of money that can be used to buy things that they want or need. Now, you might be wondering how this person can legally avoid paying taxes by using an offshore bank account. The answer is simple. They do want to owe any taxes on the money that is in their offshore account, because it is not subject to the jurisdiction of the IRS. In other words, the IRS cannot reach that money no matter how hard they try. This means that this person can legally avoid paying taxes on the interest earned from their bank account, any dividends paid out by stocks owned in the account, and any capital gains realized from selling investments in the account. They don't even have to report this income on their tax returns, because it is not taxable. Now, let's take a closer look at how this works. To begin, Let's set up our first example with someone named James. James is a hard-working individual who earns a salary of $100,000 per year. He lives in the United States and pays taxes on his income according to the current tax rates. He also pays Social Security and Medicare taxes. Now let us take a look at someone who is very similar to James, except he takes offshore banking into consideration. Mike is also a hard-working individual who earns the same amount, $100,000 per year. However, he has set up an offshore bank account in a country with zero taxes. Mike still pays taxes on his salary according to US standards, but he receives distributions from his offshore entity that are not taxable. Now let's break down how this works. Mike's company pays him a salary of $100,000 per year. This money is subject to taxes, so he ends up with a net income of $82,000 after all deductions are taken into account. However, Mike also owns an offshore company, which is a holding company for various investments that generate income. The offshore company distributes a portion of its profits to Mike as a shareholder, and this money is not taxable. Mike can receive this money through dividends or capital gains distributions, depending on the type of investments he owns. Let's say that Mike's investments generate $20,000 in profit each year. He could receive this money through dividends and distributions from his offshore company. Since this money is not taxable, it effectively makes Mike invisible to the tax authorities. This may seem complicated at first, but it really isn't. All Mike has done is set up a holding company in an offshore jurisdiction that owns his investments and pays him dividends and distributions. This way his investments are shielded from the IRS, and he doesn't have to worry about paying taxes on the income generated by them. This is a very simple strategy that anyone can follow if they want to reduce their tax burden. It is important to note that Mike doesn't actually own anything in this scenario. His name is not associated with any bank accounts or investments. The only thing that is in his name is his stock ownership in the offshore company. This means that he is truly invisible to the tax authorities, since all of his money is being held and managed by a company that is not subject to US jurisdiction. If you are like Mike, then it might be time for you to take control of your financial future and set up your own offshore bank account. You can shield your assets from the IRS and reduce your overall tax burden. It is not difficult to do, and anyone can set it up in minutes. Just remember that you still have to pay taxes on the money that is in your US bank account, but everything else is fair game. This means that you can legally avoid paying taxes on the interest earned from your bank account, any dividends paid out by stocks owned in the account, and any capital gains realized from selling investments in the account. Now, it is important to note that the IRS does not care about the money that is in your offshore bank account. They woe and come after you for not reporting it, because they have no way of knowing that you even have an offshore bank account in the first place. So if you are like most people, you can legally avoid paying taxes on the money in your offshore bank account. So if you want to take control of your financial future and reduce your tax burden, then it might be time for you to set up your own offshore bank account. With just a little bit of effort, you can have peace of mind knowing that your money is safe and secure no matter what happens. Don't wait any longer. Start planning for your financial future today.